Welcome everyone. Thank you for attending my session. Trap said, I didn't take USDCHF, but at the moment is making a bullish flag or triple top. We will definitely look at that. So if you did take the trade from last session from yesterday, we took the trade at the beginning of the new, we were looking at the chart at the beginning of the new day yesterday, which was just before this blue dotted line. We were saying to enter on the orange, our stop loss was on the red, and our take profit is up here. Our entry was not the best. We see that we had a doji, which would have been really good for the entry, but for some reason it had an additional red candle afterwards. A fairly large one, in fact. It definitely did not hit our stop loss. So if you use the stop loss that I was using here, then you would still be in the trade, as long as you didn't take out early. And other than that, if you did, then definitely move your stop loss up now. We now want to see this come up to there. That's just an arbitrary point. You don't have to put it exactly right there. Just make sure it's in front of the orange line. Make sure it's above the entry because this is a buy. So I'm going to go ahead and delete this now. And let's talk a little bit about what Trav is talking about. Is it making a bullish flag, triple top, anything like that? Let's look at the 1 hour. So on the 1 hour, what are we seeing? Well, for our buyers, this is not necessarily a good thing, which is why I really want to stress that you definitely should move your stop loss to above entry. Because what we see here, I'd like to highlight it just to make it really, really clear. That red candle right there, it's from a pretty strong uptrend. What do we see? We see two different dojis in a row. I'm sure on the 2 hour. Yeah, on the 2 hour, you can really see it. And we see that really nice, strong doji. The top of the wick is higher than the candle before it, as well as a lot of candles for a while before that. Let's see how many bars exactly. That would be 27 bars on the 2 hour. So that's not the strongest. This is definitely, not definitely, but it's unlikely this is a strong reversal. A strong reversal meaning that it's actually going to go down from here. But I do definitely see the potential for this to go down at least a little bit. So let's kind of let's go through this and see how much we could see that this would go down, and potentially even get an entry if people miss the trade. So I'm going to start off by using the normal doji, and you want to make sure to do from bottom to top, because that's how if you want to do it proper. And doing that right at the top there, it makes a line on this line. What is this line? I don't actually know what it is. What is this? Oh, that's a fib level from the high. Okay, that's interesting. So looking at our second algo target, the -618, same thing as the 1618, just the other way around. We can see that should be, that's our extension, by the way, our second extension. And I don't use the first extension. I only go for big trades, so I like to use that one. And we see that that's at a PRP as well as at a what's it called? The fib level from the larger fib, from this top to this bottom as well. So whenever two different fibs line up perfectly like that, that's something that you want to pay attention to. I'm paying a lot of attention to this level. Our original take profit was up here.
What was your side?
And now I'm thinking I want to move take profit 1. I still want to keep a take profit there, so I'm not going to move it. I'm just going to hit it, clone it, same idea, and put it just. Okay, I'm going to mute this. Okay. There we go. And we want to put our take profit just below. Make sure it's below and not above this level. Not at, not above, because sometimes we make a little bit of mistake and we have our levels a little too high, a little too low, something like that. And that's why I like to have it just a little below, because no one cares, not no one, but almost no one cares about 2 pips. So you're potentially missing out on 2 pips if it hits exactly off of it, but you're also way more likely to get out there at that level. So in my opinion, that's definitely worth it, and I always do that trick of doing just a little below the actual spot. So we are expecting a reversal, whether it be long or short. I think it will be short, but I don't know that for a fact. And the only reason why I think that is just because it's not super, super strong. Overall, I could see it going down more though. Potentially, I see it maybe wanting to hit the 0.5 or maybe even lower. I could see it wanting to come down here to the total 618 level, the golden pocket, golden ratio. And if it does that, then if you took a trade yesterday, then you'd be fine anyways because you have a stop profit. So you shouldn't care. But if it doesn't, then we have take profit 1, which is now a lot shorter than where it was. Now take profit 1 is only 103 pips away, whereas our original take profit 1 was 140. So I do want everyone to change their take profit just because we now see the confluence. We didn't see it before because we didn't have this high yet. We didn't have the high of the original movement. So you could get into the shorts now if you want, but I don't recommend it because that would be trading against the trend. And that's never something that you want to do. So looking more into your question, is it the bullish flag or triple top? I'm not really seeing what triple top you're talking about, Trav. Are you able to explain more of what you mean by that? If not, no worries. Trav said I was looking at a smaller time frame, and he had caps lock on. Okay, so looking at a smaller time frame. Are you smaller than the 15-minute? Because even on here, it's not the best. I can kind of see it if you count the bodies of those and then that as a high. That's kind of a triple top, but that's not good at all because we see it breaking in the middle. I'm not sure exactly what you mean by that. Let's see if we can do any of these. Let's use the magnet tool to be really precise. So if I use that top going through just the wick on the 15-minute, so this is like a nothing chart, doesn't even matter that much. It looks like it misses by a little bit, but let's go on a little bit more respectable time frame, and it still misses, and it's still going through a wick. So what does that mean? When price misses, when it's this close together, if it's long time apart, if it's lots of bars apart, then no one cares. If it misses by a little bit, that would count. However, this is not. This is relatively close for a trend line. This is 112 bars. For it to be considered long term, I'd want to see something at least over, I don't know, 500 bars. So this is in the relatively short term bar mark for this piercing trend line here. and we don't see the bounce. So what are we now looking for? What we're now looking for is when price breaks this line. I mean, when it tests the line, it'll almost, well, not, I'll say almost, but it's very likely that it will break the line. It's very unlikely that it will respect the line, just because it already tried to come to it and didn't even actually touch it. So when it does touch it, it'll probably just break through and come up here to our take profit 1. But if it decides to respect it at all. Right, so let's see. Let's move on to another, actually no, let's not move on yet. I was gonna say let's move on, but hold on, just remember that we're gonna talk about future fibs today. Let's talk about future fibs. Yeah, they're, oh yeah, so for an entry, if you're antsy, you could use the 382 because there's a PRP right below that, which is kind of nice, or there's at least a strong wick. I'm not saying that's necessarily a PRP. Let's check if it is. So I'm using that wick right there, and it doesn't appear to be too strong, actually. Yeah, I wouldn't enter off that, but if you're antsy, you can. I wouldn't recommend it, though. That's more of a zone. Excuse me. Yeah, I would have to say 618 is close to original entry. Yeah, that's very true. Yeah, if you're waiting all the way till 618, that's where our current stop loss is. If you moved up your stop loss at that level, so I can use this red line because it's pretty much exactly on the 618. Let's see if it's a PRP or not. So again, the red lines, though, there's an orange and a red. They're kind of hard to distinguish. The red, I'm seeing a little bit of bounces. Nothing great there, at least. Over here, that's really close. So these are all close. So yeah, I mean, I like this 618 a lot more. If price starts to come down to that level, then that's where I would start to look for, you see a doji or something, or at least one other confirmation, then you can then that would be better for the entry, and that's something you can set an alert for. So I don't have any alerts up right now, so I can actually add that one. I can show you exactly how I would do it. So you have the line there. And I don't want it one of my colors that I actually use to mark out charts. So instead, I might use purple or pink or something. And then I always want it to be the smallest thickness because it's not even a real price level. So you don't want it to be as thick as the other ones that are actual price levels. And then I go to this one, and then later on in the future, you might forget what you're looking at right now. So you want to type out in the message, basically your comments that you're seeing now. So you can say, you see 618 on mini read. I like RET for retracement just because it's more smaller. I don't know. I always use the word RET. It's not even a word. The abbreviation. What else are we seeing? Well, I want to say what to look for. So look for 1 hour doji and create. So now, when and if price goes down that far, I'm not saying it necessarily will, which is why I'm not saying to get out of the trade yet. Then if it does come down there, then we'd like to have that notification. I'll get the email and we can look for a potential buy. I have it above the actual entry so that it'll give me some time to see it before it actually hits. So overall, I hope you did take this one. If so, Good for you. Let's move on. Let's look at the DXY and see what it did. Based off this, I'm assuming, like I thought, it was going to break up with a first retracement. That looks like to be exactly what it did. Based off that pair, let's see what it actually did. So, yeah, we saw it come down and then went up. That's exactly what we were looking for it to do. It kind of weird. It gapped through this level here. Look at that. There's a little gap right there. It's not huge, but just something kind of interesting. It's pretty rare. There's another one there. It's a little bigger, but it's something interesting. So if you were looking at DXY, there was basically 3 doji type things in a row. In particular, this bottom one is really clean. I mean, the one before is really clean too. I don't love the green one, but this first red one is a really clean normal doji, and then this one is an okay dragonfly. The top wick's a little big. I don't love how large the top wick is, but it looks like it might be the kind where it's the same size as the body. Yeah, just about. But as long as the bottom looks bigger, that is good for the reversal on the upside from the downside. So DXY did end up going up as we predicted yesterday. And it looks like it may have come to a PRP. I didn't mean to make that line. Let's do this here. That's a little too high. So, oh, it's still too high. I like to be really precise if you can't tell. Okay, so if you are being really precise, then the very top wick of this candle, which almost is a hammer in a way. It's not. The body is pretty big, so I don't love that as a hammer. It came just higher, barely higher than these ones over here, and because it already broke, in a sense, then at least if this was a normal currency, it's not. You can't do this quite as much with these indexes. But if it was a normal currency, then you'd want to see price go up even more. So because the DXY is doing something that's kind of a little bit sketchy, what I like to reference is the pairs that are most used by that index. So look at this. If you look up what is DXY made up of? Oops. I replaced those words backwards. So if you go on here, you can see how much weight each of them are. You can do this for any of the XYs. You can do this for CXY, for SXY, for any of them. So the euro by far has the most weight. And because we're comparing it to the US dollar, we want to look at EUR/USD for this particular scenario because it's kind of close. We want to know if this is actually supposed to be a double top or maybe even a triple top if you count that one. That's really close though. Or if it's actually, or if it actually broke. So let's go ahead and look at the euro. I want to look at ICE as always and see if it compares at all. It doesn't really compare at all to what the dollar is doing because it's backwards. So we got to keep that in mind. This is in the way. Move that over there. So on the euro, testing for a PRP. This is, so again, remember, we're looking at backwards. On the euro, we see something kind of similar, but opposite to the DXY with, remember we saw kind of a hammer. Well, these are kind of, it's kind of a dragonfly. It's not a good one, the green candle. And then over here, I'm not sure which one of these dates it was, but over here, it looks like price came down a little bit more with that. That's a dragonfly for sure. That's a clean dragonfly. but it already broke it over here on this one, and that would mean that price did not come low enough. So it's really hard to say at this point, just because now we have double conflicting information. On the DXY again, if you already forgot, on the DXY, we saw that the price went a little above the previous high, and then on the euro, the price went a little above the previous low on the euro. And we would want, if we were to see confluence, we'd want to see it come a little below that. So we don't see that confluence, and that makes it a little harder to tell what exactly the dollar is doing right now, whether it actually broke up or not, because it's really, really close. Too hard to tell. I'm sure if you go on the daily, you can't see it all. Yeah, on the daily, that looks like it's a touch. So I would say at this point, it's best to wait and see what the market tells us is going to happen, rather than trying to predict what will happen with that. So what else did we look at yesterday? We looked at the pound versus the yen. On the pound, it went down some more. All these arrows pointing down. I don't know why this one's here. Price did go down. So this is the daily chart. It's been going down for a while. Let's look at the 1 hour. That's too much. Let's go on the 4 hour first. So again, we were looking at this yesterday. Really, really nice. Actually, I like this a lot. Let's pay a lot of attention to this one, because this was a really, really super clean dragonfly. I like the way it looks a lot, because it's huge. It's not huge, but it's big. And then we see price come down a little bit more from that. This does not look like it has had its full retracement yet. So unless it's fake, which it really does not look like a fake based on the size, it'd be hard to justify that being a fake. We should see price come up from here. So moving from the bottom to the top. Currently, price is bounced. I already barely broke out of the 786. If you're looking for an entry on the pound, one that's actually really, really safe, and you have a really small stop loss, then let's go ahead and mark that up actually. So entry is at the 886, just above, barely. So right there. And then stop loss, I already have a red line on here for some reason. Not sure why that was there. You don't want it just below this purple line. I don't know what that purple line is. Why do we have that purple line then? Oh, it's this line. Oh, wow. So the 886 is, yeah. So put it below this 886. And if we do that, then that would only be a 40 pip stop loss. You would have to make new lows for that to hit the stop loss, and your potential gain. I don't see it stopping there at the 618. I mean, that's a huge. Let me. Oops, I did not mean to do that. Let me delete the circle. So now you can really see how big that the dragonfly is, and because of that, because of how large it is, that could be a full reversal. So again, I'm a long-term trader. I'm looking for that long-term potential gain. So if we were to see something like this, I'm going to go ahead and reverse this. And we could look for that 618 exit on the overall move. If it really is an overall turn, then our first take profit would be, oops, nope, not yellow, green. Right below the 618, right there. How many pips away is that one? So again, we're risking 40. That's where our stop loss is. And then our first take profit is 504 pips away. Now you have to keep in mind, you use a little bit less leverage on GJ than on a normal currency pair because the ATR is higher, or also known as the how much it moves is higher than wait, what are you saying? It's kind of hard to see. What was stop loss and entry? Yeah, I can type it out. So entry. That was supposed to be a decimal. It did not work. Okay. 72. So on this one, of course, the risk reward ratio is absolutely insane. However, I'm not even saying this is more likely to hit. It's not even. It's not like it's a 50-50 chance. Is price going to hit this or is that one? It is more likely it's going to hit the stop loss. But I mean, it's even still with the nice clean dragonfly, I potentially could see it coming down just a little bit more even. And that's what we'd have to worry about. So I would say this trade still is more likely to lose. However, if you do a calculation and decide to take a lot of similar trades to this one, you'll lose most likely. However, because I didn't mean to use that, if we look at the ratio of how much you lose when you lose and how much you gain when you gain, that's how you beat the game. Excuse me. So the ratio is 12.29 to 1 on gain versus loss. And because of that, you can lose 10 times in a row using the same amount of leverage each time. And as long as you win on the 11th or the 12th, it doesn't matter, then you'll still be net positive. At that point, it wouldn't be by much. You pretty much break even. But it's not that much more unlikely to hit the top and the bottom. It is more likely, but I would say it's more like 60-40. Got to be emotionally, mentally tough to handle losing. Yeah. So Bird brings up a really good point. I mean, my style of trading is not for new people, because if you're not conditioned, if you're not already used to taking your emotions out of the trade, you'll probably get fed up with, this small movement every single time, relatively small movement, and you could really go down a bad spiral. And especially if you're not using proper risk management on your trades, then that would also be a loss. The way I give out my trades when I do, the reason why I don't give them out very often is because people always take them the wrong way. I don't give them out the same way that Ken gives them out. When I give out my trades, they're meant to be used with less leverage. They're meant to be more sparse and much longer term. And because of that, it's you have to treat it a little bit differently. This system has worked really, really well for me. I don't know if I've ever told you guys this, but I actually won a competition about a little less than a year ago now. That was a trading competition. I did stuff like this, and I got kind of lucky. I got a couple in a row where this happened and ended up winning first place in the competition. This is exactly how I did it. This is I used where the stop loss is really tight and there's a far away take profit, and then I basically forgot about the trade. Didn't even look at my phone for a week at a time, because that's the best way to take the emotions out of it. just computerized trading at that point. If it looks like it's starting to turn around, too bad. You can't do anything about it. And sure enough, it doesn't turn around. It keeps on going up because that's the way that it was originally designed to do. If this really is a reversal, yes, Kevin, I do swing position trade. It's I'm not position, a swing trade. The Academy has it wrong. A short swing is a trade up to 6 months. That's like if you're looking at the definition of a short swing. That's how the United States government defines it. That's how tax purposes defines it. It's up to 6 months is a short swing. And that's like if you own more than 10% equity in a company, you can't short swing trade the company, or else those gains go to the company, stuff like that. It's all about 6 months. That's for short swing. Full swing can be, I think it's up to a year, and then anything more than a year is a position trade. So I definitely don't hold for a year. That's too long even for me. But I definitely short swing. I can hold for a month. I have no problem with that. I can hold for 2 months because you're making money the whole time. Like, let's say, for example, that you got in way up here. This is on November 7th of 2018. So it's not that long ago. And you might have exited there. That would be a decent exit. You would have gained just over 4 days, 315 pips. That's really good. And if you didn't, you would have had this huge drawdown. And you might have re-entered there because that's right on the 886, maybe. And you might have been able to double down there, for example. Or maybe you just held it. And you could hold all the way down here, even farther, until you see this thing, which is finally now good for the reversal. You get out right away. Well, that's a 32-day hold. However, you made 728 pips on that single trade. To me, that's worth it. I mean, 728 pips, and I mean that's so incredibly worth it to me. But I can understand why some people don't have that kind of patience, and that's why I always say, like, just move up your stop loss to stop profit. Don't actually take out at all, like earlier from looking at UC. So if you do take this, use slightly lower leverage. Why did that come up? I have no idea how that just came up. What was this? This wasn't here before, was it? Okay, whatever. I hope that makes sense for everyone. I just want to make sure that you don't blow your account from a trade like this. Would you say the most common occurrence for your trades is breaking even? I would say that's, yeah. I mean, honestly, I haven't had a loss in about a month and a half. That overall on it. Yeah. So let me think. Yeah, I really haven't had a loss in a long time, an overall one. But usually what happens, yeah, I would say about 50% of the time, maybe a little bit more than 50% of the time, is we'll see price do something like this. Price will, we get entry, price comes up a little bit, we move stop loss up, and then price comes down more afterwards. And now I'm already moving my stop loss up, so that is break even, like you're saying. That happens pretty common, but it's hard to say. Also, remember, this is not necessarily an entry that I want you to type in as a buy limit. It's not, because I want you to look at the chart. Once you look at it, look on the 1 hour. Don't look at the 4 hour. You can if you want. They're both good, but the 1 hour should tell you if it's actually ready to turn around or not. What you'd be looking for is some sort of doji. because anything more after this as well, even on the 1 hour, we also see that really clean dragonfly because there's double confluence on 2 different time frames. This looks like it's just garbage to me. This looks like it's trying to trick people. It looks like it's trying to convince people that this was fake, but it's too clean. It's too clean to be fake, in my opinion. And you know, if we're wrong, I want to be able to afford that loss. I might be wrong. Might lose 40 pips. Oh, there we go. And you know, 40 pips shouldn't be that much on your account in terms of dollars, percentage-wise. It should be up to 4%. If it's more than that, you're probably over leveraging. Other than that, though, I mean, if this is 4% as a loss, then 500 pips as a gain would be 50% as a gain, as in 1.5. You take the value of your account, divide by 2, add that to your current account. That's really nice. That's a good clean gain. That's for take profit 1. If you want, I don't see anything in particular. This doesn't even look like that strong of a level for price to stop there. I could see price coming up even higher, and potentially even making new lows. Even if you're new to trading and you still use M's and W's, this is kind of an M, and this is a potential finish for an M. So if you're looking at this, you could say price might even come way up here. I could easily see it making new highs. Come to this purple line, that 1618 from a while ago. How many pips is that? We have to zoom out to find out. This is in the way. Let's see, just for fun. We have to zoom out more. Let's go to the daily. Will that work? Oh, I just need to go like this. I just turn off auto. We didn't need to watch the daily. So there's our entry. That trade, that would be probably a position trade, honestly. Maybe not, maybe like half a year. That would be 1,300 pips. That's more than doubling your account with the same 4% risk that you could originally have. So is there anything in particular anyone wants to talk about for the rest of the session? I was more trying to just do a quick one, just more of an update sort of session from yesterday. Any other pairs anyone wants me to look at? We could look at future Fibs a little more. We didn't really talk about it that much at all, honestly. Do a CAD pair. Okay. Let's do one no one ever does. Let's do CAD CHF. No one ever looks at, I feel like no one ever looks at this one. So let's look at it. I've never marked it up. So going on to 4 hour. Let's see if anything looks interesting. That looks interesting. That's really clean. See, this is what I'm afraid of might happen on the GJ trade, is we could see a really clean dragonfly and price comes down just a little bit too much, hits stop loss, and then takes off. Same story with this one. With CAD CHF, I potentially could see, it looks like, I'm eyeballing it, but it looks like that's at a Fibonacci ratio. Let's check. Oh, that's backwards. Look at that, that's perfect. The bodies are exactly on that 886 level. That's crazy, just how accurate Fibs are. I mean, from there, obviously, I don't think anyone, I don't know of anyone that called this out, but if you would have entered there, you'd already be up 58 pips. I definitely did not call that, but that would have been really clean. And that would have been from this little guy right over here. So That's pretty interesting. They did that. Because of that bounce, I want to see price move upwards from here on this one as well. Let's see if this is this the line? I don't think it is, but let's check. Can't get accurate if I'm not zoomed out. There we go. That's close. That's really, really close. For this high of a time frame, you'd want to use the daily at least. This is long enough. Like I was saying, the 500 bar thing. So on the daily, especially, this looks really clean now. Well, now this doesn't even match up. What happened? So if you're not familiar with Canadian pairs, you want to use long-term trend lines. Long-term trend lines with Canadian pairs are really powerful, more powerful than other pairs. And because of that, I like the way this looks a lot. There's lots of hits, so close hits. There's kind of like a zone. You have to give it some leeway. Like these breaks with the wicks, that's fine. This wick almost touch it, that's also fine. It's a long enough time frame where it doesn't matter. And now look at this. On the daily, we finally have confluence with the 4-hour and the daily chart, both having really clean dragonflies. So now it looks like I don't know what to call it. CAD-C? Okay. Looks like CAD-C could be coming up here, at least to the 618 level. Actually, wait, we have to redraw this. Let's see. If we're looking to buy. So for the buy, wait, let's look at the golden zone first. That's the most typical place it would go to. We want a blue line. There's the body of that one. This is a daily time frame too. So bodies definitely count on this time frame. Although I'm not seeing a lot more. So this isn't the strongest PRP ever. And that leads me to believe that it could break this one as well. I can see, I mean, this just hit the main support line and bounced off. So if it's not coming back down, then it's probably going to at least go to the extension. Let's see if that is a better PRP. That's a much better PRP, definitely. It's close enough where it'd be at least a PRZ, price reversal zone, in there for sure. Those are really clean. This is the daily time frame. So if you were to take this one, you'd want to use really, really low leverage, even lower than GJ, because your entry would probably be close to current, and your stop loss would be new low, and that's pretty big. It might not look like it, but this, okay, it's not as big as I thought. It's only 50 pips. I thought that was more. And your take profit up here, that's your TP1. And that one is 538 pips away as well. So this is actually pretty similar to the UJ trade, or sorry, excuse me, the GJ trade, which these pairs have nothing to do with each other. It's kind of funny how that works out though. So I will, I'm gonna go ahead and type out this one. I'm gonna take screenshots of both, and I think we'll finish on that. So let's go ahead and type this out for entry. Okay, now let's screenshot that. Copy, paste. And let's go back to GJ. And let's do this one as well. Let's go on the 4 hours so it can make a little bit more sense what we're seeing. Honestly, I kind of like the cattle one a little bit more than this one. But good to include both. Okay. Perfect. So with that being said, I think we're going to finish up here. I hope that you all learned a lot, or at least something. And I will see you guys next week on Monday. I'll post those links in on my group chat too.